Hello, 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 and welcome back to Sipping Wealth Tuesdays. So I am here with you, your amazing host, Wesley Charles. No, but I'm here with a brand new topic today. Thank you for those that are tuned in yet for another week. So this week, right now, I'll be going over for those high income earners, some tips, some things that you can utilize to help navigate some complex tax issues and concerns and things like that. So that, as y'all continue to earn your money, what are some things that you should be on the lookout for? What are some things that you need to make sure that you have on the top of your head? So I am gearing this live towards those higher income earners. For those of you tuned in with me, hello, hello, hello. Go ahead and drop a comment in the comment section. You can say something like, "Hey, girl," anything. But let me know that you are here with me. Let me know that you're present, and then also definitely drop a comment throughout the live. So I know this is insightful and that y'all actually enjoy these lives and actually get valuable information from them. Hey. Hey. I wish they would actually stop saying like Facebook user and actually tell me who it is. But yes, hey y'all. Hey. So yes, let's go. I'm gonna go ahead and jump right in. I don't want to take up too much time from y'all Tuesday. And I also want to make sure those of you that are tuning in after the live are able to get this information as well. Also, two things for those of you that are with me, go ahead and hit the share button so that your friends and families and loved ones and followers can wealth up with you and get this valuable information. And also be sure to subscribe to the YouTube channel, Sipping Wealth, so that you do not miss out on any Sipping Wealth lives. All right, let's jump in. Okay, so for starters, y'all, I'm not gonna start with budgeting. I know how y'all are. My bad. I'm trying to fix this lighting. It's a little. Okay. All right. So for starters, I'm gonna start with tax planning. So as a high income earner, you have to make sure that you have some sort of tax planning going on. This over $2 billion. So small business owners overpay taxes by over $2 billion, and that's mainly because of tax planning. They're not properly tax planning. So, in doing so, you're able to know that, hey, I need to implement this during the year. I need to make sure I do that during the year. And even when it's time for tax time, you're not scrambling trying to get your information in order. I know a lot of people are like, oh my gosh, here we go, it's tax time again. I got to figure out where my paperwork is, whatever the case may be. But these are things that should have been, you should have been planning. You should have already had a tax plan. So throughout the year, it was just kind of, okay, stacking things in a folder, and then you move from there. So as a high income earner, you want to make sure that you do have a tax plan, that throughout the year you're revisiting it, and not, like I said, just at tax time. So this accounts for any estimated income, as well as making sure those estimated taxes are paid as well, deductions, understanding tax implications for your investments or different decisions that you're making. Just really understanding, hey, is this is it going to have a huge tax implication? What the tax implication looks like? So this is what tax planning is actually helping you do. It's making sure that you already know, okay, if I sell this property, I'm going to be hit with a tax bill of this amount. If I sell this property, these are different ways that I can help mitigate or mediate like different the tax burden. So I can do this strategy instead of or that strategy, versus you just waiting until tax time and being like, oh shoot, I just got hit with a huge tax bill. All right. So that's number one. The other is retirement accounts. I spoke about retirement accounts last live, but to really for my higher income earners, a lot of times you're already phased out of the directly contributing to your Roth IRA account. But that doesn't mean you cannot contribute to your Roth. It just means that you have to do what we like to call a backdoor Roth. So it's like a little loophole in a way. So this is money that you're essentially putting money into your IRA traditional account, and then you're moving that money from your traditional account into your Roth account. At that time, you will pay your tax bill on the money that you're moving into your Roth account. The thing about a Roth account, it's taxed now, not later. So that's why people like the Roth account, because at retirement you don't have to worry about getting hit with that tax bill. So that is because it's the deferred tax, and then there's that tax-free growth as well. So really taking advantage of contributing to your IRA, even if it's a 401k, contributing to that, doing the catch-up contribution if you can with through your employer, and then also taking advantage of that backdoor Roth during years where you may have a slower year or a year where you're not making as much, where you go ahead and take advantage of the backdoor Roth and take that tax hit in a low income year versus in a year where you're booming. You're like, oh yeah, you don't want to have to be taxed at that amount at a higher tax rate. You want to take it in the other year. All right, hopefully this is making sense to y'all. Let me know. Let me know. Okay. The next thing is leveraging your tax credits and deductions. I'll have lives throughout the year actually going in detail with tax credits and deductions. But this is why it's so important as a high income earner to make sure that you are sitting down with your accountant and tax professional and not just at tax time. Because what it helps you do is say, hey, I really want to make sure that we are taking advantage of these tax credits. Hey, I'm looking to do this and that next year. What tax credit will align with that? Or, so making sure that you are leveraging these tax credits and deductions. So, and then understanding there may be a phase out. So even though you may say like, oh, this person got the retirement savers credit, why did I get that credit? Well, maybe you're because you're a higher income earner, you don't qualify for that. You phased out of that. But understanding your limits and things like that helps with setting you up and knowing that, okay, now I'm going to be stuck with a $15,000 tax bill, $20,000 tax bill, 50,000, six-figure tax bill. How can I help, take advantage of these credits? Maybe I'm going to do a renovation. Maybe I want to go Energy Star with my renovations so that I can help take that tax credit for my energy efficient tax credit. Maybe purchasing energy efficient electric vehicle that aligns with the tax credit. There's different types of credits that literally go unclaimed that people can take advantage of. The other is harvesting tax losses that I want to touch on. So harvesting tax losses, what it essentially helps do is it's helping you offset your capital gains with any of your investment losses. So if you have if you have a property that you're going ahead and selling, and you're like, ooh, I have I'm going to have some gains from the sale of this property. And then on the other hand, you have some stocks that you traded in that you lost so much money in that. You can actually do that tax loss strategy to help kind of reduce that tax liability and take that hit this year. Instead of like, oh, okay, I'm gonna roll over those losses into next year, or I'm gonna roll over these losses next year, and then I'm gonna sell the property next year with the additional losses from next year, for example, and then that will help offset my bill. Things like that. One of the huge things as a higher income earner, of course, you're at that point, you're excelling in your career. You're doing your thing out there. Something else to also make sure that you're doing is making sure that you're staying informed. So I have these weekly webinars. I also have the Sipping Wealth Facebook group, things like that. Making sure that or even making sure that you're on an email list for the IRS or whatever the case may be. But you want to make sure that you're constantly informed, because this is how you keep more money in your pocket. making sure that you know, okay, this upcoming change is going to affect me. So I want to make sure that I let my tax professional know, or talk to my tax professional or my accountant about this, because it affects me. As a professional, yes, I know a bunch of tax laws and things like that, but I don't know what you're doing, throughout the year, unless you share that with me. So a lot of people, they may do whatever the case may be throughout the year, and they're not keeping track of it. And then they come to me and they're like, "Well, I'm here to file my taxes. I'm not sure. I don't know." Da, da, da. You're giving me that. That's what you're saying to me. Like, I'm not sure. I don't know. And I'm trying to pull information out. But unless you're informed and you're notating and you're tracking these things throughout the year, you're going to lose out on some valuable credits, deductions, and incentives that you could have taken advantage of. So make sure that you continuously stay informed. I do these lives for a reason. I'm not getting paid from these lives. I do it because I want y'all to stay informed. I want to make sure that, hey, if any of these things apply to you, whenever you come and you set your appointment with STA, that you're like, "Hey, Wadleen, you said this and that during the live. Is that something that applies to me? Is that something I can take advantage of?" I love those questions. Those are great because it shows me that, hey, one, that you're actually making a conscious effort to make sure that you're taking advantage of these things, and that you're staying informed. All right. The other is, so section utilizing section 529, using 529 plans. So I'm going to do 529 plans and paying your children. I'm going to kind of group those tips together. All right. So 529 plan is an education savings plan. So generally these plans are they're created on behalf of a child, so that to save for their future education. Okay. So this is because you are putting money into this plan, the contributions are tax deductible. So this is money that you're putting in here that is growing tax free, that you're not paying essentially taxes on, as long as this money is going towards the education, a qualified educational expense within this plan. So this is a huge tax incentive for a lot of individuals, higher income earners as well. And then on top of it, say you have a child that's working in the business, and you create an account for them, you're paying them to their account, you're from the business, you're paying the child, and then from that child's account you can fund the 529 plan, you can fund their custodial account, you can fund different investments for and saving vehicles for your child, and there'll be a deduction on the business end. That's what paying your children is like, such a huge and and a strategy that's not used enough. So it's a strategy that's like, people are like, "Oh, I heard I could pay my child for my business," or they're probably even going about it the wrong way, putting children under the age of 17 on W-2 payroll, like but things like that. So they may be doing it the wrong way, or they may just be paying the child and not really doing anything with the money. But you could actually pay the child, put that money towards an investment account, like a 529, whatever account, that's actually growing money. And there's that tax-free advantage as well with the 529 plan specifically. There are other plans as well, but I'm just speaking to that 529 plan and how that you can utilize that. The other tip I'm going to give is real estate investing, because who doesn't love real estate? No, so as far as real estate investing, of course, there are so many. I chose this niche because, oh my gosh, there's just so many tax incentives just wrapped around real estate investments. So when I was thinking, okay, like what industry, with what industry do I resonate the most with? What industry I'm like extremely passionate about? I'm like, real estate. Oh my gosh. So when making sure that I read up on different tax incentives and things like that surrounding real estate, um, I was like, wow, this is such a huge and underused vehicle, and a great tool to not only offset or defer your taxes generational. Like you could defer it, you could keep deferring these taxes and just create continue to use these some of these real estate strategies investments. You can do a 1031 exchange and just keep on doing it, rinse and repeat. Like if I owned a home, I'm living in the home, every 2 to 5 years I can sell, do a 1031 exchange, and do it all over, buy a newer, bigger house and do it all over again. Get that exclusion. Exclusion is up to $300,000 as married, if you file married. So say I purchased a house for 100K, and that was, I know it's probably going to take years, but oh my gosh, it's booming. 10 years later, now the house is 400,000. I bought in an amazing area. Now I'm like, okay, I'm gonna go and I'm gonna go and purchase a 700 $800,000 property, $1 million property, and I'm gonna take out a loan out of that $1 million property. I'm gonna take out a 300K um, line of credit on that property, and I'm going to purchase another, and whatever the case may be, whatever your strategy is. But there's just so many ways that you can that can be utilized to through real estate to really help your wealth journey. That's all I'm saying, y'all. Through cost segregations, and that's just accelerating your depreciation, or accelerating your depreciation expense for that year. So maybe you earn a lot of money and you have a property that you purchased, or that um, maybe you're in the real estate industry, you have a property that you purchased, you're doing real estate investing, and you want to do a cost segregation, accelerate the depreciation. You are able to take a depreciation hit. A lot of lenders do allow you to add back depreciation. So sometimes it is even, a lot of times it doesn't even hurt you when you're applying for funding, different things like that. And you're also able to decrease that tax liability. Y'all, I could go on for days when it comes to real estate investing and the different strategies that you can implement with growing your wealth capacity, growing your investments, and also deferring your taxes and taking advantage of those capital gain exclusions and things like that. And last week I went over on the individual basis, but throughout the year, like I said, I will talk about it some more. All right. The next one is, I'm gonna actually hit on hiring a professional. Um, as you continue on your wealth journey, y'all, the person that just started doing taxes yesterday, please stop having them do your complex tax returns. Um, no. Like, I know you want to support so and so because they started their tax business. You can send them somebody with a less complicated return. But I say this, you want to have somebody that has more experience. It's like going to a doctor that just got their MD, that just graduated, got their MD, versus going to a doctor that has years of experience in the field. So they're able to identify symptoms a lot quicker versus the MD they just got in. It may take them a while. They may to a while where they're able to identify, correlate different symptoms to different sicknesses or diseases. So they may be stronger in this area versus the other. And MD that's been in the game, they may be like, oh yeah, I've seen someone that has the same thing. I'm able to identify it, or da da da. So that's like, and also going to a specialist, somebody that specializes in your industry. Um, like if you're out here bringing in millions, and oh my gosh, you're closing a 700K deal, a $2 million deal, you want to make sure that you have a person that specializes in your niche. Like if you're a restaurant owner and you're you're running $3 million a year, you want to make sure your accountant knows your industry through and through. You wouldn't come to like, hey, we specialize in real estate. Can you come to my $3 million restaurant? It's going because it's not my specialty area. It may take me even more time to even be able to dial in the restaurant industry. I rather make sure that my colleague that specializes in restaurants that's able to help you out because they're going to know your industry through and through. So as you grow in your wealth journey, as you hit the certain financial markers, you want to make sure that, hey, the person that you choose, the professional you choose to give you advisement, financial advisement when it comes to your business is specializes in your industry. Um, no, for as you grow in your journey, it may not matter as much, but once you get to a certain level, yeah, you want to make sure that the person specializes and say like e-commerce. So, hey, what do you know about e-commerce? Hey, do you know about cryptocurrency? Hey, you want somebody that specializes in cryptocurrency? Um, Whatever the case may be. So, choose your professionals wisely. You want to make sure your team is solid. Um, like I said, if you're in the beginning stages, it may not matter as much, but as you grow, you want to make sure you have the right team. All right. And so many tips. Okay. The next one I'm gonna go over is I actually don't want to touch on that one. Okay. Okay. The next one I'm going to go over is understanding alternative minimum tax. So this is the AMT. So alternative minimum tax is essentially it's essentially like your a threshold for higher income earners. So once you reach a certain amount of money, you have your alternative minimum tax, which means this is something that you're going to have to pay um, and in addition to the other taxes that you've already accumulated. So your Social Security, Medicare, Medicaid, those were at a certain percentage. Once you reach a certain amount, now they're like, okay, we're not going to tax you the same Social Security and Medicare, you know, um, tax bracket or tax rate for those. Now we have our AMT tax. So this is a certain limit on your taxes that you're actually paying for reaching over that threshold. So it's saying, hey, because you have a certain amount, we're going to tax you that amount that's over that certain amount at this particular amount. Um, Hopefully that helps. So it makes sure that those higher income earners are paying taxes, are not avoiding taxes on that other amount that's over that threshold. So they want to make sure that, hey, we're hitting you with some sort of tax, because you're of the over this threshold. So we don't want you at completely zero because you're over this threshold. We want you to pay something. And it's just for that amount that it's over the threshold. So of course, and I put it in simpler terms. It can get a little more in depth, but you do want to have a bigger understanding of the alternative minimum tax (AMT), so that you know, okay, at which areas or how much taxes I'm going to pay because I'm over this certain threshold. Also, hey, what is it going to look like when I'm doing tax planning? What is it going to look like when I'm deciding on whether or not I should do it in installment sale, or am I going to be able to put this amount, or should I put this amount in my 401k or not, or should I put this amount in the 529 plan or not, whatever the case may be. So it's really going to help with deciding what your tax plan kind of looks like because of this minimum tax. Um, and the last thing I'm going to touch on as I close out, as far as the tips, of course, I'm going to run through what I've gone through, is overall when you're navigating your complex tax issues as a higher income earner, as you're getting over that 600K up threshold, you're no longer in that you're in that 2%, top 2%, top 3% range. You want to make sure that you have a team of professionals that's really going to help you navigate these things. Yes, staying informed is crucial. You want to make sure that you're bringing up different things to your tax associates, your accountant, your team, your professional team, your advising team that's going to advise you properly. But you also want to make sure that you have knowledgeable individuals, accredited, licensed individuals, if you're doing financial planning, things like that, on your team, because that's what's when they're going to help, really going to help keep more money in your pocket, decrease your tax liability, and also get you to the next level. Ultimately, can we say, hey, we're just going to pay $0 in taxes forever? No, but we can help mitigate, bring our tax bill down to what we're supposed to pay versus letting money walk out of our pockets because we didn't know or we didn't take advantage of different tax incentives. So as I continue to do these lives, um, watch them, press play, and do what you got to do. But definitely make sure that you continue to stay informed. Join the Sipping Wealth Facebook group. Uh, Turn the notification bell on for the YouTube channel. But make sure that you're continuously staying informed with these different tax laws, incentives, tips, strategies, things like that. All right, y'all. Any questions? Anything I need to bring up? I know it's kind of the beginning of the year. Everybody's kind of getting warmed up to the new year. I'm sure I'll be back every Tuesday at 6 p.m. So tell your friends, tell your family. I'm getting the topic for next week, y'all. Oh, she didn't send it to me. So yes, tell your friends, tell your loved ones, tell your family, your followers. Um, share it, share it, share it, share it. Um, with your followers. And y'all, I'm just trying to get the topic for next week. I'll make sure I have it ready to go next time. And okay. Y'all, because this is taking so long to scroll. Why? Okay. All right, here we go. So next week I will be back 6 p.m. Eastern Standard Time, again with another topic. So next week we are going over breaking down the tax code. So I will talk to you about the tax code specifically, tax code, just kind of giving you more of an idea of what how the tax bracket system work, how the standard deduction kind of work for you. I did have a conversation with someone today, and they're like, "Oh, somebody came out with, or somebody told me about this new thing that the IRS is doing," and they're literally explaining to me how the current or how the tax bracket system work. And I'm like, no, it's always been that way. That's literally how taxes work. So making sure that you all know exactly how they calculate your tax bill, how the tax bracket system works, and then kind of identifying how to navigate the tax codes. If you wanted to go to the IRS site, kind of look around for your own understanding, how to go about doing that. But yeah, I'll make sure you all are informed. So be sure to tap in next week at 6 p.m. Thank you again for joining me for another episode of Sipping Wealth Live. And I have a great announcement coming up this week too. So make sure that you're in the Sipping Wealth group. because I'll be posting tomorrow, the announcement tomorrow. I'll see y'all later. Have a great evening. And don't forget, let's wealth up.